All right, everybody. Happy Monday. I hope you're ready to have a fantastic week. I know I am. Last week was pretty good. The trading was decent. We made back pretty much what we lost in the week previous. During the last week, I did try to squeeze it out over the weekend, and unfortunately, that did cause some setbacks. This weekend, we did take some losses. We also had some winners. We had some more losses, and yeah, overall, I took a lot of trades. I went a little trade crazy over the weekend. But we ended up pretty much where we started the weekend, a little bit behind. I think up to this point, that's where my last video was. We were up 4.6%, so very close to the target of 5%. And then I had a few slip ups. I took a few trades that maybe I shouldn't have, or at least this trade was definitely one I shouldn't have taken. But a few of these trades I was pretty confident in, and they just ended up going against me. It happens. Even when you have what you think is a high probability trade setup, they don't always work out. That's why it's called high probability and not guaranteed, because nothing's guaranteed. And trading conditions were not fantastic. They weren't the best, I have to say. It was a lot of chop. It was a lot of false breaks in the internal market structure that I was trying to trade. And overall, a few of these losses were definitely avoidable. The finish line was in sight heading into the weekend. I literally only needed one more win. A 0.5% win would have put me over my goal. And I was going in with a mindset that I was going to take some smart trades. I wasn't going to throw in hope. I was going to aim and fire down the barrel like Israel Adesanya. And I definitely started off the weekend on the wrong foot by throwing and hoping with this trade. And I did not get what I hoped for. I took a loss. And then I tried to take one that was more thought out, had a better plan to it, ended up being a loss as well. That's all good, a little setback. We get through those. And yeah, as you can see, it was just kind of back and forth over the weekend. I'm not going to go over all these trades because, honestly, there's not too much value out of them. Most of the winners were, market structure breaks following the range that we were trading. Waiting for a market structure break at the low end of the range, trading it up to the high end of the range. And a lot of the losses were similar type trades that just didn't end up working out for me. But I have recouped the mistakes that I made over the weekend, a few of the losses. I got those back. And at this current point, what I have locked in is 4% plus the realized profits that I have from this trade, which right now is about 0.8%. So I actually right now am up more than what I was at the beginning of the weekend, very slightly. And I do plan on locking in the 5% from this trade. If this one starts to go against me, I will close it out early and just take my winnings. I want to, get this over with. I want to recoup my losses from the previous week. Actually, I think I am up because if you remember, I wasn't down exactly 5%. It was a little bit less. So the 4.8% that I have locked in actually should be enough. But I wrote down 5%, so we're going with 5%. Now, this trade that I took was following the internal market structure from this high, the high which was a bullish break in the primary structure. I've already gone over this plenty of times, so I'm not going to get too into detail with that. But what has happened since my last video is we spent a long time trading in this range. We did come down to put in a lower low from this guy. I did kind of consider this a bullish break, but I did say that I would prefer if we came down to put in a new lower low, since this was not market structure on a lot of time frames. On the 15-minute, you can barely even see it. I would not count that as market structure. So we have gotten a lower low, and we do have more higher time frame market structures, so I would call it more confident market structure. And yeah, from this low, we began ranging, and just recently we have come down to put in one more lower low. So the internal market structure point to pay attention to now is this lower high. I think if we break this lower high with a close, then I would be pretty confident in saying that this would be the higher low in the primary structure. This is what I've been waiting for this entire time since we put in this high. I've been looking for signs that the retracement is over, and that would be the internal market structure from that high breaking. And right now it appears like we are pretty close to doing that. Now, not only have we continued this downtrend, but we also SFP'd the lows twice. So this could potentially be a Wyckoff model 1. And let me actually double check that we got an SFP on the 15 minute, because that's the structure I've been paying attention to. Close actually, so let's put a horizontal line right here, because my boxes sometimes are a little inaccurate. But yes, we have SFP'd this on the 15. So we have, the original low, an SFP of that low, and then an SFP of the SFP. So this right here tells me that there's a good chance that we come up to the high of, this range that basically started forming once we put in this low. The target of a Wyckoff for me, based on what I know about Wyckoffs, which isn't a whole lot, but, I have some knowledge of it. I've been trying to learn and try to identify them a little bit better. And so the target of this Wyckoff, I believe, would be this high up here. And if we reach that high, then we would be breaking market structure bullishly. So I did take a trade off of this SFP. It was not the best entry, but I wanted to wait for a confident entry. And for me, that was waiting for market structure to break after the SFP. You'll notice that we had, a few SFPs before this actual low was put in. We, maybe you can even say we got a Wyckoff Model 1 right here, because we got an SFP of the market structure point, followed by an SFP of that wick, followed by another SFP of that wick. So the reason I didn't enter right away, the reason my entry isn't down here, is because, I wanted to wait for market structure break because I knew that this could happen. I was thinking that maybe this first wick could have been the low, but I didn't want to take a trade off of what I think. I wanted to take a trade off of what the probabilities say. And since we did not break market structure yet, in fact, if we zoom in on the 3 minute, I thought we SFP'd the high, but we didn't even make it up to there, I don't think. So yeah, I wasn't going to enter until we broke that last lower high, and that did not come until right here. And so that was my entry. Invalidation below the wick. It was a large stop loss, larger than I usually like to take, but it doesn't matter. It doesn't matter how big the stop loss is. It matters what your idea is. And based off of just the SFP alone, not even counting the Wyckoff, my target for this SFP was this high up here. Since we failed to put in a new swing low, then my target would be the previous swing high. And that did give me a decent risk reward, a 1.5 to 1. Not great, but it was decent. And with this trade, since I had so much going in my favor, I was willing to take more of a risk with this. I took a 2% risk rather than a 1% risk, just because there were multiple reasons why this trade should work out. We had the Wyckoff, we had the SFP, we had the internal market structure break on the way down, and this area, or I should say this entire zone, is potentially a higher low in the primary structure. All in all, I'd say it was a pretty confident trade, and that's why I took a 2% risk with it. So at this point, a 1.5% risk reward. Let's actually check and see what it was at when I TP'd, because I TP'd right about here. It was a 1-to-1, and I took out half the trade, locking in a little less than 1% after fees. So I got 0.8% locked in. I have half of the trade remaining, and the next thing I'd be looking for this trade would be a break in this market structure. Now, I do have my stop loss to entry at this point, so there is a chance that if we break market structure, we could retrace, stop out my trade before putting in the higher low, and in that case, I would be looking to re-enter once I see signs that, the higher low is put in. So I would be looking for an internal market structure break after the retrace. So that is basically my plans at this point. I think this has a pretty decent likelihood of at least giving a move up to that range high that I was talking about, this guy over here. And this could even lead to a move up to this guy to attempt to put in a new higher high in primary structure. Now, if we SFP this internal market structure point, then things change a little bit. But I think if we're able to close above this high, then there's a good chance that we at least make a run for this high, regardless of if we close above it or if we just SFP it. I think that this is the next logical target after breaking market structure. So that is essentially my plans at this point. All right, so it's been a few hours, and we have made our way up to that internal lower high I was watching. And on some time frames, we SFP'd it. Not the 15 minute. Let's check the 30. Okay, not even the 30, but on the 1 hour, we most certainly have wicked the high, at least as of right now. And we even have some potential bearish divergences forming as we put in this slight higher high and as we took out this significant level. We can even see those divergences on the lower time frames. The 30-minute right now appears like we might get a divergence here. It is close, but it looks like this wave may top out here, and if we do, it will be a slight bear div. And the money flow seemingly is also putting in a lower low, but we can check the lower time frames and see how likely it is that the 30-minute will diverge. Now, the 15-minute from that wave that I was measuring on the 30-minute actually did not put in a bearish divergence, but from this wave back here it did. And we can also see the bear div with the money flow if the money flow starts to turn back down right now and it cannot get a move up into the green to void that bearish div. So there are some signs that may make me consider either taking profits or locking in more profits for my long. So what I've done, rather than take out more profits up here, because I think there is a chance that we just turn this around and kind of void all those bearish signs, I have just simply moved my stop loss up into more profits. I moved my stop loss to right about here, a little bit below this market structure point. And the reason being, if we lose this low, then I think there's a good chance we make our way down to this next area of demand, which is where my entry is. So I didn't want to move my stop loss down to cover that demand because I don't want to risk the profits that I just took. So I moved my stop loss up, and if I get stopped out, then I can look for another entry. And if my stop loss gets hit, I will lock in 1.25% on this trade, meaning that I have now locked in my goal of 5%. In fact, it will be about 5.3%. Now, I know that a 5% loss is not equal to a 5% gain, at least in these circumstances, and reason being, if I go to my calculator, let's say you're trading with $100 and you take a 5% loss on your $100. Now, I mean, if it's over the course of a couple trades, then it will be slightly less than this, because if you're taking 1% losses, then, the second trade will be 1% of 99, the third trade will be 1% of 98, but this is just a rough estimation and kind of to show you my point. 5% of 100 is $5. So that means that after a 5% loss, you're at $95. Now, if you take 5% of 95, it is not equal to 5. It is 4.75. So when trading, a 5% loss is greater than a 5% gain if you take the loss first. But regardless, I am still, in profit for the last few weeks. I've made back my losses because it was not exactly a 5% loss that I took. It was like 4.5%, give or take. So a 5.3% win on, let's say 95. We'll use this example. Then, I made back more than what I lost, essentially is what I'm trying to say. So the goal has been reached, and I can put an end to this make it back series because I've now made it back. Now, I could take a loss in my next trade and be back at a loss for the last few weeks, but the point of these videos was to sort of illustrate the mindset that I try to have when I have bad weeks like this, because bad weeks happen, and to show that the way that I try to regain my losses, to bounce back from these kind of things, is to take my time, plan out my trades, even though I didn't do that with all my trades, But overall, most of these trades were, well thought out, high probability trades in my opinion. And yeah, I could have tried to make this back in one or two trades by taking some, risky positions, maybe risking more than the 1 to 2% that I usually risk. I also probably could have got it back faster if we had some better trading conditions over the last few weeks, but regardless of the conditions that we were in, I still managed to reach my goal. And yeah, we had some setbacks along the way, most of which were my own fault. Maybe some of it had to do with the crappy conditions and the choppy price action that is essentially meant to engineer liquidity from people who are taking low probability trades, which in the case of some of these trades was me. But for the most part, the way that I recouped these losses was through carefully planning out trades and managing them to the best of my ability. Now, as for Bitcoin, I think that if we now begin to lose this low after SFPing this market structure point, then there's a better likelihood that we come back down for this low and that this Wyckoff model does not play out, at least not right now. Maybe we come down to SFP this low one more time and we get a Wyckoff of here. And if price is able to make a move up for this high and close above this wick now, then I think things become much more bullish. Now, the next trade ideas that I'd be watching, well, number one, I guess would be something like this. I would be looking for an SFP of this market structure point, and if I see things to continue confirming this, like maybe a lower time frame market structure shift, which if we zoom in here, we do technically have 3-minute market structure here. So we go from this high to the low, and then we put in a higher low, or a higher high and a higher low before this SFP. So if we close below this low on the 3-minute, then I would consider this as an SFP rather than just, maybe a quick wick, essentially a fake out of an SFP to get people to go short before getting that move up, which this could very well be. I've seen that happen before. We get a fake out SFP, people start to short, and then we get the breakout. But if we break this market structure point, then I may be looking for a short on a retest. If we close above this low, then I may be looking for more long positions on a retrace. If the opportunity is presented, this is an area that I'd be watching right away. It's a zone of demand. And if we get an extended move to the upside, then the next area I'd be looking for shorts would be, if it will load in, this high up here. This is the next significant market structure point to watch, and SFPing it would be bearish. And if we see a market structure shift bearish after breaking market structure and flipping it bullish, if we do something like this, work our way up here with some structure, and then get a bearish flip, then that is something I'd be paying attention to as well. But this could potentially be the moment that I've been waiting for since we started this retracement. We may have put in the higher low in the primary structure, like I've said many times, and this could potentially be the start of a much larger move to the upside, given the fact that we have so far been trading in this very small range, directly below the larger range, which is what I was looking for back before we even broke out of this range. And like I said in my last video, I think continuing structure here and breaking back into this range will be a good reason for Bitcoin to get a move up to sweep this liquidity and fill this inefficiency, potentially even making its way up to this high. So that pretty much does it for this video. Thank you all so much for watching. If you enjoyed the video, please consider leaving a like and subscribing. It means a lot to me. And I will see you all in the next one.